that not every opportunity is going to be a back up the truck and buy opportunity. But if you do get such an opportunity, it's not enough to buy, 1% of your assets or 2% of your assets, but you should put significant amounts of money into that, because then the power of compounding and the power of that business will, take you to another level financially.
Hello and welcome everyone. I am Vishal Khandelwal and this is the 1% Show. This show is an open-ended exploration into the minds of the wisest people around to help us learn to think, invest and live each day a little, even as little as 1% better. You can learn more at vishalkhandelwal.com. My guest today is Mr. Ramesh Damani, member of the Bombay Stock Exchange and one of the most successful investors in India. A proponent of the Buffett style of value investing, Mr. Damani is one of the most well read and erudite investors I have known in India. He holds a bachelor's degree in commerce from HR College in Mumbai and a master's degree in business administration from California State University. Charlie Munger has been quoted as saying, I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than they were when they got up, and boy, does that help, particularly when you have a long run ahead of you. Mr. Damani is among the smartest investors India has seen. He's also one of the most diligent, and he is a learning machine. In fact, he is a wizard par excellence of Dalal Street. And that makes me even more nervous and excited at the same time to host him on his show. With this and no further delay, Mr. Damani, welcome to the 1% Show, and thank you so much for agreeing to do this.
Thank you, Vishal. Thank you for your very warm words. Regarding the wizard part, I don't know. I have also interviewed my share of wizards, so it's nice to be called one by you, whether it's true or not. But thank you so much.
Thanks, Mr. Damani. So my very first question is about the story of your life, about how you began in the stock market and the early lessons at home that shaped your personality as you grew. I have also read somewhere that your father tried hard to get you into the stock market while you were not initially interested. So please tell us that story too.
Sure, Vishal. As you're well aware that life has to be lived forward but understood backwards. So it's only through the prism of time I've been able to understand some of the career choices that I've made in my career. The most important was, of course, I graduated from HR college and then went to do my MBA. As you remember, in 1977 in India, you may not remember that, of course, but Dalal Street was a backwater at that time. It used to be a very noisy, dirty, smelly place, and it didn't seem like the more careers were in MNC companies, more careers were, with consulting perhaps, but definitely not in the stock market. So I bore that with me when I went to America. So, in a bit of frustration, my father, understanding that there was rapid change coming in the Indian stock market, in the Indian economy, that the first whiff of liberalization had already hit the Indian market, he made a proposition to me. He said, I'm going to send you $10,000. Now, you can do what you want with that as long as you invest that in the stock market in America. And if you make 2 times your money, that's yours to keep. If you lose the money, no questions asked. It seemed like a very fair bet to me. So I started investing this sometime in the early 80s, Vishal. And as you recall, the Dow was in 1982 was 1,000. After 20 years, it had gone back to 1,000. And in the surprising fast period of about a year and a half, I managed to lose all that money. And that was really frustrating to me, because how was it that an MBA student who was well read in the middle of a bull market could lose all his money so rapidly? And the reason for that, as I've understood later, that while I was driving the car, I was looking at the rear view mirror rather than the front view mirror. What do I mean by that? I started investing in stocks that were done well in the 70s: gold, silver, commodities. They all had been down 70 to 80% by the time I started looking at them. What I didn't realize is that stocks that were down 70 80% can fall another 70 or 80% after that, which is what exactly happened to my basket of stocks, because we were now looking not at an inflation environment, but a pro-growth environment. Ronald Reagan had come, Paul Volcker had curbed inflation, and I should have been looking at the great growth stocks of that era, the early tech stocks of that era, but I was blindsided and looked at the old stocks. So in retrospect, it was a cheap tuition. The $10,000 gave me one invaluable lesson in the market, that it's forward looking, not backward looking. And the rest, as they say, is history. That got me interested into the stock market. And in '89, when the opportunity opened up to buy a seat on the Bombay Stock Exchange, my father persuaded me to come to India. It did take a little bit of persuasion, but I came back to India.
So what was those lessons, right? You've alluded in the past to the idea of connecting the dots, right? That Steve Jobs talked about in his famous Stanford speech in 2005, right? So tell us about those most important dots that you now connect back, looking back. Right? One of those that your father persisted and he sent you that $10,000. The second is that you lost that and you learned your lesson early in life, right? And then you got your came back to India and got your seat at BSc. But what are the other, if you remember, go back in hindsight, remember, what are those other critical dots that really have shaped you as an investor over the years?
Well, sometimes, Vishal, they are accidental. Sometimes they are intentional. My father wanted to get me to a career in the stock market, and he kind of figured out that if I lost money or made money, it would interest me anyway. So that was good. But as I mentioned to you, after graduating, I worked in America as a software programmer, which was the early vanguard of Indians going abroad and making a living doing programming work. Uh, but unbeknownst to me, that had a huge influence on my life. So I worked till about 87, 88 in a computer services firm. Then I came back to India. And 89, India was in the midst of a great cement boom going on. The so-called Harshad Mehta bull market was raging on. And I was appalled that everyone, a lowly jobber, a clerk, knew the price of cement in Ranchi or knew the price of cement in Coimbatore. And here I was completely unaware of which were the great cement companies in the world. And that was very frustrating to me. But I also realized later on that that was the bubble we were speaking. When everyone is aware of something, it's probably in bubble territory. But what happened to me providentially is that in 92, 93, Infosys went public. Now, remember, in my background, I was a technology programmer. So I immediately understood the value of what Infosys was doing. I didn't understand how to size my bet, but I knew that Infosys was a great company, that they had a lot of labor arbitrage, and the company could keep on increasing its earnings because of the huge arbitrage opportunity that it gave. So I was among the first few investors that bought into the Infosys IPO. And as you know, the stock's gone up a few thousand times since the IPO price. I'll remind your listeners and viewers that Infosys IPO debuted at a market cap of 30 crore rupees. The company was earning 3 crores, so a P of 10 and a market cap of 30 crores. This was not that far back, 30 years back in the early 90s. So that gave us the first opportunity. So all those people who kept looking at cement, it had fallen 30%, 40%, were looking at the back view mirror. But I had learned my lesson. I looked at the forward view mirror and I realized that India would be a good technology powerhouse. And once Infosys played out, we tended to look at a lot of the other technology stocks also. So that's how I connected the dots, as Steve Jobs said. I was very lucky that the technology industry was just being born in front of my eyes. And because of my understanding of the business, I could be a participant in the stock market part of it too.
Great. So in the second episode of the show, I interviewed Mr. Vinod Sethi, right, ex Morgan Stanley, and he was also one of those initial investors in Infosys. And his story was that he got to meet Mr. Narayan Murthy, right, at a hotel, and he was so impressed by the humility of the guy that he put his money. Of course, knowing that the technology is future in this country. What was your story of Infosys? Of course, you were a technology guy, but what made you invest in a business that was just raising around 30 crore rupees, as such a small business with no history? So what exactly was your story of Infosys?
I mean, if a lot of people ask me that, oh, people who must Infosys regretted it the rest of the life. So now you need to invest in the new age economy stocks that are going public today. And I have to pinch myself and remind them that when Infosys went public, it was a 30 crore market cap. Even assuming a generous rate of exchange, that was about 10, 12 million US dollars at that time. And we got to understand those valuations. And because of my background, I understood the value of the business that they were providing. And a lot of smart investors, including Vinod Sethi and the Inam people, were investing in the IPO at that time. So I understood that this could be a good company. We didn't understand, of course, the great corporate governance that Narayan Murthy would bring into it, the standards of excellence that would compare Infosys to the best in breed overseas. That all came later. But we understood pretty early on that there was a unique opportunity in Indian software businesses. And we were lucky to be among we kind of understood that everything was not plant and machinery. that intellectual property had value, and that Infosys employees came and went was not a negative but a positive for us. And I think, the rest of the say is history, Vishal. We were lucky, no doubt about it.
Great. So it's been almost like 30 years that you've been in the market, right? So over these 30 years, which have been the most important non-negotiable investment principles that you've applied with the greatest success over these years? And the second question is, what do you know about the world of investing today that you wish you knew 30 years ago when you were getting started?
I'll answer the second question first. I think at investing at some point requires a degree of boldness. And what do I mean by boldness? I think investors need to size the opportunity. Great opportunities are very rare in the stock market. I mean, you can count them on the fingers of your hands. The great opportunities of the last 30 years, the great stocks, the HDFCs, the Infosys, the Wipros, the Asian Paints, those are some great investment opportunities. So when they show up, it's not enough to make an investment, but you need to, as Charlie Munger and Warren Buffett has said, back up the truck and buy it. Now, cut to 1990, where I was just trying to get my feet wet and trying to understand. You really wanted to put in a meaningful amount, and the end result 20 years later or 30 years later would have been that you would have been a billionaire. And the fact that you couldn't do that, is a very important lesson that I think investors need to understand. That not every opportunity is going to be a back up the truck and buy opportunity. But if you do get such an opportunity, it's not enough to buy, 1% of your assets or 2% of your assets, but you should put significant amounts of money into that, because then the power of compounding and the power of that business will, take you to another level financially. I wish I'd known that in the 1990s, because I was very fortunate that Indian market was very underdeveloped at that time, and the lots of opportunities we found in the consumer space, in the technology space, in the public sector stocks, if you will. And if there had been a degree of understanding of the necessity to be bold and to put money on the table, I think while I've done very well in my career and I have no regrets, I think it's almost hard to believe, but that the opportunity that India presented it, not what I made, but what India presented, was that a lot of people who took advantage became billionaires. And I think I feel I shortchanged myself on that regard, because I didn't know how to size up the market and what a good investment opportunity meant until much later in my career. And by the time I got to know it, it's become very hard now to find these multi-baggers that we found in the early 90s in India, because now India is a more researched market, a more looked into market, a lot of liquidity in it, and the pricing is also more aggressive. So I think that was, one regret that I have, Vishal. If you repeat the first part of the question, then I'll answer that.
The first part of my question was the most important non-negotiable investment principles that you've applied with the greatest success over these years. So those two or three principles that you have never left and which you have applied in your investing, which have really helped you.
Vishal, the most important thing is that while there'll be a lot of froth in the market from time to time, in the 90s, Karnataka Ball Bearing and Mazda Leasing were the glamour stocks. In 2000, Himachal and Global were the glamour stocks. In 2007-8, a lot of the infrastructure companies were the glamour stocks. But they never had the fundamentals to support the valuations that the market was giving them. So it's, until we understand the business, we're really going to go around investing for momentum. I think it's become very popular in bull markets to invest where the momentum is. And while you can trade where the momentum is, and sometimes you have traded, but mostly I don't even do that. I think investment is we try to find the intrinsic value for business, and we pray to God that is a discount to the real value in the stock market, and then we invest. The second thing is the way I look at investing over many years. What has taught me is that you're trying to make about 22, 23% a year, which in effect means you will double your money every 3 years if you do that. And I always try to look for business like that. People might say it will double in 6 months' time, or this will be, the next Infosys. I rarely pay attention to these kind of things, because I know that the path that I'm on, that if it compounds money at 20 to 23%, we will be well off in the future. Let me give it a more graphic example so that your listeners can understand what I mean by that. Most of us had a 30-year career in the stock market, which means that if you double your money every 3 years, you're going to get 10 doubles in your life. And if you get 10 doubles in your life, almost any amount of money becomes 1,000 times more than what you started with. And that's an extraordinary power to the testament of compounding. So basically, if you start, I didn't start with 1 crore, but if you start with 1 crore, you'll be worth 1,000 crores at the end of the period. And I think that's the most astonishing lesson that I learned, that you don't really need to be rich. You don't really need to inherit a lot of money. You just need to buy great businesses and have them compound for you. And the result at 30 years will be pretty satisfactory.
I want to ask your seek your insights on the statement that you often use, backing up your truck. You just mentioned about that, right? And you've also mentioned that you learned it late in your investing life. But once you've now that you've learned it, right? How does one get over one's doubts and fears about the uncertainties and risks of investing and stocks, and learn to actually back up one's truck, right? How have you learned it?
That's very interesting. It's a very difficult thing to do. I think when you're young and brash, maybe you can do it because you don't know better. But as you grow with a family and responsibilities and health, you're more chastened. So I think it requires a unique combination of courage, conviction, and cash. And those three have to merge together in an idea. And in the last 4 or 5 years, when I've tried to overload myself on a stock, sometimes I've hit a brick wall and been disappointed because the stock has not delivered what I thought it would. So these are things easier said than actually practiced. Uh, in terms of how do I propose to do that in the future, I tell a lot of young people like you do, Vishal, about my career and my investing style. And I'm hoping one of them will understand this when they're much younger and are more gung ho and put it together and then say, oh, Mr. Damani told me to back up the truck and do it. I think for myself, while I'm still hopeful that I'll find the right opportunity somewhere down the road, the odds are getting increasingly slimmer because not only has the portfolio grown, so you can put in large amounts of money, but also the risk aversion has uh, become greater because you want to protect in the senior years of your life what you've done. So maybe I'll get this opportunity. I'm not sure, but I think the legacy will live on hopefully through one of the many young people who come to me and who will learn the right lesson. It's very easy to put a large amount of money, but to get it right is the second and most important part of the journey. And I think to get the courage, the conviction, and the cash all at the same time. I mean, I'll give you an example in some other stock that I was extremely bullish on in 2000. The entire Indian liquor industry, Vishal, was available for about $100 million US, which I mean by the alcohol, the spirits industry, and the beer industry. Now, I mean, in which part of earth would people not understand that the Indian market for liquor can't be worth $100 million US? That's about 400 to 500 crores at that time. And yet, no one is willing to touch these businesses for whatever reason. They felt that Malia was not best in corporate governance, or these businesses were poorly understood, and yet they were paying almost a 4 to 5% dividend yield during those years. Now, if there was ever a case that I should have backed up the truck, because by that time I was 10, 15 years in the market, I had the cash to buy 5% of these companies, and yet I couldn't do it. There was a fear of public opinion. Your friends would say, "Well, that's not a good stock to buy," and you were looking for their agreement, whatever. And I did pull the trigger, and to my eternal disgrace, I made a lot of money in these stocks, of course, but these stocks have gone on to become multi-billion-dollar enterprises now, and they're all managed by the Heinekens of the world and the Diageos of the world. So they would have been great businesses to invest in. I knew even at that time my downside was very limited. I mean, I was buying McDowell's at that time for 40 rupees with the 2 rupee dividend. Now, what could go wrong in that investment? It would go down to 35 rupees. Nothing else was going to happen to me. It was the opportunity cost and the courage. I think more importantly, I think the courage is what's so important for an investor. The boldness, which I referred to in the first answer, and the ability to put it on the line, put the money on the table and say, I so firmly believe in this that I don't care what anyone says, I will do it. And I think uh, I'm more hopeful that someone in the next generation will learn the lesson. I think I'm a pretty slow learner in these things.
That's a great insight, Mr. Devani. Over these 30 years, you've also seen, I'm sure you've read across hundreds of Indian businesses and managers from very close angles, right? What have you found in common between the very successful capital allocators as compared to most other managements out there that have destroyed shareholders' wealth? So, what are those critical things that really tie these successful capital allocators based on your study of companies and managements over these years?
I think they generally will have a track record. I think people who come and speak with a megaphone or bombastically, be wary of them. Generally, the great managers have a track record. I mean, you will be surprised. Infosys went public in '93. Before that, they had at least 5 to 10 years of every quarter reporting earnings. You could see the track record that they were reporting. So generally, these people are very passionate about the business they run, and they have built a track record before they've approached public markets. And you need to kind of sit back and think, is this the guy ready to change the world? So, you don't meet these kind of people very often, but someone with a good vision, and then someone, either he or someone below him, with the good execution capability. I think that's a good combination of people to find. And you will find them, once in a while you will find them, and your trick is to get them at the right valuation. So, in the early generation, of course, we saw Narayan Murthy and Azim Premji and the TCS people all doing fabulous jobs out there. But we can increasingly see that in, say, a Bajaj Finance run by Mr. Jain. Extraordinary set of businesses that he's built in the company. And you ever listen to him, it's almost like going to 1 hour talk is like spending 2 years in Harvard business school. It's that good. So if you listen to management and if you look at the track record, they leave fingerprints. I don't think they're without fingerprints, and it is my job as an analyst to understand that and to separate the wheat from the chaff.
While researching and reading about you from your past talks and conversation, I realized that you've always favored or mostly favored businesses that can raise prices and you've said in the past that if you can find a business which can raise the prices of their products or services every year without affecting the demand for that product or service, that is a great business. Now we are living in a world of everyday lower prices, as the Walmart tagline goes, and this has largely been funded by cheap money and huge amount of private capital floating around the world. Lots of businesses have been disrupted, and most industries have become very competitive over the years. Given this backdrop, how do you, or like, have you seen the moat of pricing power getting diluted from businesses that you thought would be immune to the same? And if yes, how does one still practice this idea of looking at pricing power? Because in its essence, it is still holding a huge amount of relevance in creating profitable companies.
Vishal, that's straight from Buffett 101, pricing power. Buffett has always said that if you raise prices and start praying, it's a business that does not have pricing power. So you want a business with pricing power. Uh, you're right, given the technology and the productivity. I mean, I used to be a member of the Bombay Stock Exchange. I still am, though not an active member. And I remember that we used to charge 1% to 2% brokerage in the early 90s. And now it's down to bips, maybe 5 bips, 10 bips, even if you can get that. So the business with no pricing power, but made up in large parts by the volume that have taken place on the exchange. The exchange, we used to do $100 million on a very busy day in the Bombay Stock Exchange in the early 90s. Today you do, a few, 10, $20 billion before the end of, probably a bit more than that, to be honest, if you include the NSC. So very few businesses, have that moat that they can raise prices and not be affected in their business over a period of times. And if you find a kind of business, I mean, that's the one you want to back up the truck and buy, because yeah, it's extremely, extremely rare to find in these days. And in fact, all the technologies that are coming down the pike over the next 5, 10 years, artificial intelligence, robotics, genome sequencing, uh, almost all of them means there will be a deflationary of prices, that things will get cheaper, faster, and better to do, whether it's in printing, whether it's in brokerage, or whether it's, in architecture, which you model everything in 3D before you do it. So I mean, it's the eternal quest to find a business with pricing power attached to it. You can find small businesses that produce a niche mineral and they have some pricing power, but a business on scale that can have pricing power is not easy to find, Vishal.
Mark Twain said, "History does not repeat, but it does rhyme." But if we are to look at the cycle of 2020 and 21, it doesn't rhyme with history so well. Living through 2020 and now in 2021 has surely been one of the most interesting markets that anyone has ever seen. You've seen a lot of fascinating markets in your career. How did this 18 to 20-month period stack up to your own experience with market history in terms of its uniqueness and the fact that we had a vicious bear market very quickly and then a pretty similar vicious bull market very quickly? So how does this 18-month period stack up in your own experience in terms of market history?
Vishal, to be honest, I was a late comer to this bull market. I tend to pride myself to figure out when the bull market starts, when the bear market gets over, when the bull market gets over. But I mean, we were dealing with COVID-19 in the first and second wave, and it really got frightening for us at some point to see the entire world locked down. You get outside the street in my house, and you could see a car, not a car there, which used to be such a busy thoroughfare. So, it kind of shook me up. The fact that no planes were taking off or landing shook me up even further. So, it's only in maybe September, October of last year that I understood whatever I'd been doing, that a new bull market was underway in India. So I was, the market may have bottomed out in March 2020. I don't think I got bullish until say September 2020, September, October 2020. So you will have to say that it took me an additional 6 months and a few thousand points before I understood that we were in a new bull market. Bull markets always, the same. They ride up on skepticism, so whether it was the 90 Harshad Mehta bull market or 2000, there's always have to be some skepticism out there. But what I've learned is this, like you, Vishal, I've interviewed some of the best investors of our times. And one thing I learned from all of them, and which I learned myself fairly late, is that they were always bullish on India, no matter what happened. You could have had Kargil and they were bullish. You could have had the pandemic and they were bullish. You could have, gone through the global financial crisis and they were bullish. And the reason they were bullish is that India is one of the few countries with a demographic lottery, basically. We have a young population that's coming of age. We have a democratic government and we have a zeal of reform, which sometimes is 3 steps back and 2 steps behind. But the reform continues on an upward and onward trajectory. So I think they understood that in the early 80s, in the 90s, to be bullish on India because it was the uniquely placed country in terms of democracy and demographics. India was, and I think the same things kicked in India of 2020. The market having fallen so sharply, 30% or so in a matter of few months. The reforms happen typically when a crisis takes place in India, and then the savings rate of India kicks in, and all the capex that is needed to accommodate the huge boom in consumer spending kicks in. So I think in some ways they have been similar, these bull markets, riding on skepticism and riding on the possibility that we have a huge population that will, demand its pound of goods and services in the world. And I think those who have been cynical or those who have been, wary of this bull market sometimes make money very quickly. The market falls 20%, you make a lot of money. But you can't afford to remain bearish because, the market very quickly teaches you that India is in a bull market and that you should remain bullish in India. And my career has been a testament to that, Vishal. I started my career, the index was 800, the Sensex. Today it's 60,000. So in a period of 30 years, it has gone up maybe 70x or so. So it really didn't pay to be bearish. What it paid is to find great businesses, stay invested in them, and hope your money compounds at that rate at only 20 to 24%. To me, that's the golden mean of everything I do. And my career is also a tribute to that. Anyone who can, you don't need to be the best, you don't need to be the brightest, you don't need to be the best connected person in the world. All you need to do is find great businesses that can grow at 20 to 23%. Now, that's not as hard as it seems because the index itself is growing at 16, 17%. So you're just trying to beat the index by a few more percentage points. So, pardon me. So, I think my career has been a testament to that. And I have realized that, yeah, occasionally when the bull market tops up, you sell some, get some liquidity, 10, 20% liquidity out there. But otherwise, remain invested as long as you think the business is doing fine.
You talked about hosting a lot of great investors on your show, The Wizards of Dalal Street, and I thank you for doing that. Tell us one lesson that, in your understanding, ties them all in their similarities, and one lesson that separates them in their uniqueness.
What ties them all is, passion for the business. I'll tell you a story of probably the most famous investor in India today, Rakesh Jhunjhunwala. We were together at a bar. Three, four of us were drinking, you know, some evening, and as we were leaving the bar, Rakesh slipped and fell. And we all, someone ran to get him some water, someone ran to get a chair, someone ran to make sure that he had a cloth or whatever. Uh, So I went to get him a bottle of water. And by the time I came back 2 minutes later, he was already sitting on his chair, calling his broker, talking about the price of gold or Nifty futures or whatever he was doing. And that's an example of focus. I mean, the kind of focus, these great people never took a vacation. I think for 20 years they probably took a weekend vacation. They never went. They're constantly involved in the market. And as one of my friends told me, that it's not good enough to be 100%. You need to be more than that, because everyone's 100%. All the good people are 100% out there. You need to be more focused than even the best focused guy. So they bring extraordinary amount of focus to the market. Having said of Rakesh, he is someone who has broken the rules. He is is very loud, very opinionated, extremely confident in his views of the market, uh, very bullish on India, as if you will. And Mr. R.K. Damani is someone whom I have also great respect, Radhakishan Damani. He's probably the world's best listener. I mean, they're exact opposite. They're great friends, both of them, but they're exactly opposite of each other. I think if there's a room of 10 people, R.K. Damani will be the quietest, though he's probably the most savviest and the most successful investor. He's the quietest investor, that if you will. But I've interviewed people from India, I've interviewed people from overseas, I've interviewed, a lot of the greats, Michael Steinhardt in America, I've interviewed Jim Rogers, I interviewed Mark Faber. But the one thing that will come through is they're all students of history, and they're all very passionate about the stock market. I mean, if the stock market didn't exist as a concept, I'm not sure they would all be rich. They're only rich because the stock market exists, and they're so passionate about the stock market. So, to me, that was an extraordinary revelation, that it takes you need to really get up in the morning and thank the Lord that you're in the stock market, and you need to bring an extraordinary amount of focus to the markets. Uh, I think it helps to be a good listener for whatever it's worth. I think in the stock market it helps to be a good listener, to help to be a good reader, to read voraciously across the spectrum, not just stock market or finance, but in psychology, investing, pandemics, whatever have you. So those are some of the things I have found that would help young people as they look to their career. They need to read a lot, think for themselves, be extraordinarily passionate, and I think it helps to be a good listener.
I had a question on Mr. Radhakishan Damani, but you already answered that. My next question is on another great Indian investor, the current generation of investors maybe have not heard or read much about, and one who has inspired you a lot, who was Mr. Chandrakant Sampat, also known as the doyen of value investing in India. I would love to hear your first person account of the biggest lessons you learned from him.
Sure. I think I'll tell you a story which is, not that well known about Chandrakant Bhai. He was, of course, my father's friend, but very generous. He used to share a lot of his ideas with me. And the first day I went in the stock exchange, because I'd been introduced to him, I went up and said hello to him, because he was the only one I knew in the ring at that time. And I didn't know any other question to ask him. I said, what to buy? So, because as a young person, he took me under his wing and he said, Ramesh, there used to be a physical ring in those days. He says, out there's a company trading, they're called Indian Shaving. And the price is now about 14, 15. Don't buy it now. He says, it's too expensive. When it goes to 12, you buy it. Today, I think the price is closer to 6,000. So maybe it's a 500x in 30 years or something in that neighborhood. Uh, there are two stories of Chandrakant Bhai that will help you. The first told me by Durgesh Bhai, that when Mrs. Gandhi was assassinated in the 1980s, they were all very scared. The market was in a free fall. What would happen? So they bumped into Chandrakant Bhai on the stairs of the BSC, and they said, "What's going to happen?" And Chandrakant Bhai said, "Well, if I were you, I would go and buy Myco." And they looked at him aghast. I said, "The country is reeling, Delhi's in flames, and you're telling us to buy stocks." He said, "I'm very sorry that Ms. Gandhi died. It's very tragic, but nothing's going to bring her back to life. But neither is the price of Myco going to come back. You're buying it because it's such a discount today because of all the going on." And of course, he was right. The price of Myco went up a lot. But the other thing that we learned from Chandrakant Bhai, and he really was before the liberalization era. He was there, but he basically ended his career around 2000 or so. So he didn't really participate in the tech boom, in the infrastructure boom. So he was the so-called MNC king. He was very interested in Colgate, Lever, because of the very low working capital model and the cash they threw out. But he would sit in my office for an hour, and this big belief I have in compounding was taught to me by him. I mean, basically, one on one. I went to an MBA school. I didn't understand the meaning of compounding. The Chandrakant Bhai on a scrap of paper would explain to me what the meaning of compounding is. And he would always tell me that, Ramesh, always invest in appreciating assets and never in depreciating assets. By which he meant, of course, that don't buy expensive cars because they're depreciating assets. In fact, buy stocks or shares which are appreciating assets out there. And of course, when you're young, you don't understand. He said, I got to live, I got to have a vacation, I got to have a girlfriend, whatever I want to do. And he would say, well, that's a choice you make. But if you want to be financially free, this is the path you need to take. So those are some of the lessons that Chandrakant Bhai shared with us. And they've actually stuck with me. I mean, I think they made an indelible impression on me. And today, when I talk to young people or when I read about great investors, I try to find if they have been shaped by similar tenets of philosophy.
I wish so too as well. Uh, my next question is about noise and information, right? So we are living in a world which is awash with noise and a lot of information. What is your process of separating signal from noise in the world? And what about independent thinking, which is so much required in the field of decision making and investing? How did you develop that mindset amidst all the noise and information around?
I was extremely scared to lose money because I came from a fairly modest background, and I just didn't have money to lose. So when people used to come and tell me stories that oh, so and so operator is buying this stock, so the hawala will be greater in 2 weeks' time, or this stock will double in 3 months. I never believed that because I realized life can't be so simple that someone gives me an idea, or someone rings a bell and tells me to buy this, and then the stock will double and I'll make money. I mean, if that was true, everyone would be rich in this world. But I was smart enough to understand that it can't be so simple. Uh, what I was also smart to understand is that great businesses create value over long periods of time. And I understood, somewhat grasping, but I understood that India presented such an opportunity. I remembered, when my wife and I having discussions. She was in America, I was in India, and we were commuting back and forth. And she was saying, "Why are you leaving America and going to India when everyone is doing the reverse?" And I kept telling her that, India is this great marketplace which is yet to be explored. It's the proverbial glass of champagne that is, only half full. You can, see it going up to the full, whereas in America it's already a full glass. Not that America didn't have the great opportunities, but for someone with my background and my family, India represented an extraordinary set of opportunities that became clearer as each year moved on. I think today she agrees with a lot of the decisions we made in the 90s. Uh, so, because I didn't have lose money, I did my own homework. I thought for myself and I invested for myself. I don't really have a big research team, a big department or analysts who follow every stocks. I kind of run a prop firm. We don't do brokerage anymore. We don't run a PMS. We just do prop investing. So it's just me and my son. We sit together and thrash through ideas and see which makes sense to us. Uh, if you want to ask me how do I pick stocks, Vishal, I think Buffett said that he likes to analyze a company and then relate it to the market price to see whether it's in line with his thought. I do the opposite. I look at the market price and see how the market is valuing at that particular business and whether I can understand it at that valuation or not. So, in that say, I do it slightly differently than Warren Buffett, because I use the market price as a benchmark, and I've taken to heart his advice that the market throws a ball at you every day in terms of stock prices, but you don't have to act on that. You have to act when you think it's this nice ball up the middle which you can hit out for a six. So that's what we try and do. Uh, we constantly look at the market caps, the enterprise value of various businesses, and see if these, a lot of these companies today, for example, that I'm looking at, uh, I find them trading at extraordinarily cheap discount, even well into this bull market, compared to the intrinsic value. So I'm finding value there, and because of my experience, I'm not hesitant to put a chunk of money in there. Whether I'm backing up the truck, I can't say, but I'm still putting a chunk of my money in the hope that the market will ultimately reward that business will trade for its true intrinsic value as opposed to its notional quotational value right now.
What's your view on cryptocurrencies? If you have a view, right? Warren has called Bitcoin as rat poison squared, and Charlie has called it contrary to the interest of civilization. What is the view that you hold?
As I also said, the distinction is always there, Vishal, between blockchain, which is a technology that you need and will be very powerful, and Bitcoin or Ethereum or whatever else currency that goes on there. Uh, there is a speculative bubble in that, which causes. I mean, there was tulips that traded place in Amsterdam. There was the South Sea bubble. So people go through easy money periods. Will go through a lot of times where something will lend to the focus of global investors. So, I mean, would I buy, you know, say at today's prices, a Bitcoin for my grandchildren? I mean, that's a good test that if you're bullish over 10, 20 years. And I've thought about it a lot, and I would respectfully pass. I mean, I mean, India is already going to pass a bill that would ban all private cryptocurrencies. Okay. So you're just trading pieces of items with each other in the hope that there'll be a greater fool coming, taking it out of your hands. There's no productivity to the asset we talk about. Whether you buy farmland, you get a crop. You buy stocks, you get a dividend and a greater ownership of a business. You get real estate, you'll have someone wanting to move in there. So every asset that ultimately is valuable needs to be productive. And the only case I've heard for Bitcoins or it's like being productive is that people will lose complete confidence in the physical currency. So they want a digital alternative. But someone will create another digital alternative today. Maybe El Salvador will say that we are going to be responsible and create another digital currency. Something that's so easily created, I'm not sure that I see the value paradigm. A lot of smart investors are disagreeing with me, and we'll see how this plays out. But I'm not willing to put my grandchildren money in there. Let me put it that way.
So we're living in a world where the pace of change is just multiplying, even as our formal education system seems insufficient to teach all that is required to thrive. Given this, what advice would you offer to students and young adults in self-educating themselves, and what are some of the key work and life skills they must learn and hone to do well in this century?
Well, that's a tall order. I don't know. I'm not in a position to tell them what to do for their lives. But this is what I do know. A lot of people in their 20s and 30s, uh, if you're looking ahead a career of, say, 20, 30 years, and suppose you want to be a writer, I mean, you probably want to go through hardships, probably want to travel, probably have a number of love affairs because that makes you a better writer. All right. And if you want to be, a lawyer, you probably got to read legal books. Fair enough. I appreciate that. But if you want to be financially free, I mean, that's more advice that I can suggest to your viewers because there are a number of ways you can approach that. The first is the principle I told you much earlier that when you're young, invest in appreciating assets and not depreciating assets. And in appreciating assets, there are two ways. If you don't know much about the stock market and don't have time for the stock market, buy what Buffett has always said, buy an index fund. Buy it and it will rise with the times. If you had bought it, say, in 92, at the peak of the 92 bull market at 4,500, when everything went to hell in a handbasket the next 12 months, you still make up 15 times your money in the next 30 years because from 4,000, we're at 60,000 right now. So you invest in index fund. But if you're like me, who are in the stock market, who are very passionate about businesses and you want to follow them, a better way to make a lot more money is to invest directly into the stock market. So the follow-up question then is, how do I know about 5,000 stocks that trade up and down? And the short answer is that You don't beat Sachin Tendulkar in a game of cricket, but you can take him on in chess, perhaps. You can take him on in a game of hockey, perhaps. So find a circle of competence that you're comfortable with and invest in that. So my answer to that is, if you are a finance professional, maybe you can look at banking and finance companies. If you're a doctor, maybe you should look at pharmaceutical companies. It's pretty easy for a doctor to understand that India is going to be diabetes capital of the world. So who are the companies that make diabetes medicine? What is the treatments that are MRI treatments that are the best in the world, and who offers them in India? So if you're a housewife, if someone asks me, what should I do? I said, you're also a consumer of FMCG companies. So you understand instinctively which tea you use, which brand has most value. So maybe I'm putting it very simplistically, but it's important to develop a circle of competence to do out there. And what Munger and Buffett have always said, that in order to make good in the stock market, if you're not investing in index fund, of course, is very simple. You just do it, forget it, and leave it for the next 30 years. Is you need to read a lot. I think that is a singular piece of advice that I'd give. You read a lot, and you basically try to move your money at about 20-23% a year. And if you do that, in 30 years, your net worth will increase about 1,000x. You can't beat that.
About reading, you've said in the past, and I quote, in the business of investing, reading is fundamental, and the raw material of this business is reading. And you don't read to get the next great idea or the next stock pick, but you read just to become a bit smarter about how the world operates. So, given this, tell us about the two, three books that have had the greatest influence on your life.
Well, a lot of books. I mean, my wife always complains, what Charlie Munger's wife complains, that I'm a book that's walking, basically. So uh, I think what influenced me a lot was books on Buffett. I think Buffett and Munger, I think both of them are extraordinarily sharp. So I pretty much read a lot of the books on Buffett and Munger. The one that resonated a lot with me was two books on Buffett. One is called An American Capitalist by Roger Lowenstein, and other book is called Of Permanent Value. And in particularly on permanent value, there's a chapter where, which, if I'm not mistaken, says 2 minutes into a business school. And what it does, it explains Buffett was asked one day when his favorite stock, Coke, was down a lot, saying, is the best over for Coke? Because, generics had taken control of the market. And extempore Buffett spoke and explained that Coke's margin on each ounce of serving is basically a cent. And anyone coming into the generic space is not going to be able to do cheaper than uh, Coke at 1 cent an 8-ounce service. And hence, that moat that Coke had was pretty much impregnable. And I remember after reading that, Vishal, I was so, rattled at how well he knew his companies and how well he, understood the businesses and, the various forces that attack a business at a time. I remember walking out and taking a long walk, trying to just absorb the lessons I learned from those 2 pages, basically a 2-page thing. So anything on Buffett is pretty good. Lynch is also pretty good. But nowadays, there's a variety of business publications, access on the internet, podcasts, YouTubes that you can read. In fact, someone in YouTube has gone and made, what does Buffett think about investing in inflationary time? What does Buffett think of moats? So you can just see these and build a database for yourself. But I will tell you this, that investing, direct investing, or active investing as it's called, is a full-time job. I mean, don't think you can just wing it. It's very unlikely that you can wing it. I mean, if you do index investing, fine, you invest at some point and you forget about it for the next 10, 20, 30 years. But you're doing active investing, it will require and challenge you. It's not something that you can buy and forget. You need to think about it. And truly great ideas come across once every few years. But you don't know which is a great idea, so it demands further exploration. So my advice is, if you're doing this, do it full time. Otherwise, do index investing or do whatever you are happy with. I mean, it's my advice. I'm not telling everyone this is the only path to nirvana. There are many paths to nirvana. People can choose. If you want to be a writer, you want to be an architect, you want to be a beauty dresser, more power to you. But if you want to be financially free, uh, the giants have told us how to do this. The most astonishing thing is that that path is available to everyone. I mean, it's not that I'm telling you rocket science. I don't have a cure for cancer. It's basically buy good businesses at a discount and compound on them. So that path is open to everyone. And what is remarkable about that insight to me, Vishal, is that someone from middle class background like me even has the audacity, forget actually achieving it, which I haven't yet, but has the audacity to think he could be a billionaire. I mean, that's a remarkable testament to the power of this idea. I mean, who many people think around that they want to be a billionaire in life? Whether I've achieved it or not is not that important, but the fact that I could even think about it sometime in my life shows to me that what a powerful idea it is. That if implemented correctly, it could really take you to a financial place where you where he thought all the the Jeff Bezos of the world belong and the Jeffrey Ellisons belong, but Steve Jobs belong. What are you doing there? And that's the part of the idea I'm trying. That's the part of the stock market.
Talking about Buffett again, he said that when you examine your life, your only measure of success should be the number of people you want to have love you actually do love you. You've achieved tremendous success as an investor over the last 3 decades, but when you look back, what does success really mean to you?
I mean, that's a pretty good definition. Uh, Tell you, I do regret that I've not achieved the wealth of some of my peers have achieved, and I would say that it's because of my fault, not because of the opportunities. The opportunities were limitless in the last 30 years in India, so I fault myself for that. But on the other hand, I've been very lucky. I've had a lot of young people come and listen to me, and I've been able to influence them through my shows or through personal talk. Just to give you an example, just last week, 10 kids and me, we went to a beautiful country called Armenia and spent 4 or 5 days bonding there. So that's the part of my life I enjoy, that I can share my experiences with a lot of young people. Like I said, one of them is going to understand that, hey, I got to back up the truck and buy this great idea, and he will be well on his way to being on the Forbes 400. So that that, what Buffett said is a good measure. I mean, there is a great need in all of us to be loved. Um, and do I measure myself that I didn't win the Oscar or the gold medal in my profession? Yes, I do, and I feel very bad about that. Because not because I need the money, I just felt that we all need to do our best with the opportunity set provided, and God provided me that opportunity set, and that if I didn't take full advantage of it, I feel bad about that. But leave that aside. The other part of my life is that, can I leave a legacy of thought that would inspire the next generation, perhaps? It's the audacity of what I'm saying, and I try to do that in my own way, Vishal, much as you try to do with your podcast. I try to do that in my own way. Whether I meet some young people in my office, we go on a trip to Armenia, or we do it through the shows that I've hosted. We try to do it this way because this is a fascinating place, and a lot of young people come to me who are starstruck, uh, and they need to kind of be tempered and shown the ropes of how this is done. And I would judge my life to be well lived if some of them are able to achieve the success that I'd hoped for.
Coming back to COVID again, what has been your biggest lesson from the COVID pandemic as far as life is concerned, right? What has changed for you in the post COVID world from the pre COVID world that has also changed the way you look at life?
Well, I was lucky in the sense that we live in a fairly comfortable area in South Bombay. We isolated ourselves. To me, the biggest bonus was that I got to spend time with my grandchildren who were very young. I think today they're 4 and 2, so they were like 2 and 1 when they started, 3 and 1 when COVID started. And so it was an extraordinary. Normally you're busy at work, traveling, so you get only limited amount of time. So we got a lot more time with my grandchildren. To me, that was the biggest bonus, if you will, from COVID. And of course, I understood that digitization works. I mean, basically, we are trading, investing, and people were multi-networking. My office was in 4 different locations, and yet it was all harmonizing together and working. So, it turned out that human beings are fairly resilient, that, they can work through adverse circumstances. And I was fairly confident that um, people were always assuming that a vaccine normally takes 5 years, 10 years to develop. It's a very long process, but instinctively I knew that we would come up with a vaccine very fast. I think COVID took 2 years to infect people, and the vaccine took 1 year to develop and inoculate people. So it shows us that all the challenges that we have in the world of world hunger, inequality, poverty, whatever, have solutions, and increasingly the solutions will be found in the next 5 to 10 years. So it's an extraordinary human achievement. But for me, of course, the best part was that I got to play with my grandchild, more on one-to-one basis. You can't put a price tag on that. That is extraordinary for me.
I completely agree. I've got the privilege of talking to a lot of people who've done really well in life investing in outside. And one common theme that comes out is their thoughts on passing on their wealth to their kids as a disservice to them, because the fun is in the journey, having limited resources, carving your own path, and figuring it all out. I'm sure you also fall into that camp. So if not your wealth, I am sure you must have passed on some very important lessons to your children, and you want to pass on some very important lessons to your grandchildren as well on how to live a good life. So what has been your advice to them?
I think, Vishal, I'm just grappling with that in my life as now I'm hitting my 60s. I need to. I always admire people who have had a second act in life. I mean, look at Bill Gates. He ran the most successful technology company through it all and devoted his journey to philanthropy. Look at Al Gore. He came within, few electoral votes of winning the presidency in the U.S. Didn't win it. Didn't go back and sulk. Made a great documentary, The World in Change, about global warming, and built a whole career outside that. I always admire people who have a second act in life, who do more than what their calling was in life at a particular point of time. Uh, Look at Nandan Nilekani. I mean, he's just ran one of the most successful technology companies, then did such an extraordinary job for India in the Aadhaar scheme, and he continues to do in education and so many other fields. So, what I personally hope for myself in the next 10 years at least, I will have a second act in life, that I will not be defined only by my investing career or by the modest wealth that I made. That there should be, raison d'etre for my life. There must be some other bigger calling than just doing good for oneself. And I hope the next 10 years will, bring that out with me. Uh, I think the pandemic has delayed all of us by 2 years, since we all want to stabilize our family and health issues. So I think if you did this interview with me 10 years from now, and I hadn't done something more impactful or more meaningful, I would be a very disappointed person. What I exactly will do, even I'm trying to struggle and find out. But maybe this will be a periodical interview, and in a decade, I will have a better idea of what the next act for me is. All I know is that it's very important that you have a second act in life. I think it's just extraordinarily important.
Uh, what's the single best piece of advice you ever got?
Buy low, sell high. No, I mean, I think, levity aside, I think what I've got and what I will give is the same thing. It's compounding. I mean, to me, that's been the Rosetta Stone, if you will. It liberated me the minute I understood it. It can liberate anyone. And as I mentioned to you, the audacity of a middle class boy, who got a pocket money of maybe $1 when he was a kid, thinking that he could be a billionaire. That itself to me is just so uh, thought provoking. I mean, you never assume, you never dream, or the India of the 70s, you never were allowed to dream that big. You always said, get a good job, settle down, take care of family, save a little money for retirement. The audacity of that dream is extraordinary, and that opportunity is now open to almost anyone. I mean, it's not my permanent recluse. Anyone who thinks right about finance or is interested in financial self-sufficiency, there's a very clear path that the greats have laid out before us. And maybe you won't get a billionaire, you get a 200 million. What's wrong with that? I mean, that's still a lot of money in the world. So um, I think that's the best piece of advice I have got from Chandrakant Bhai, and the best piece of advice I keep giving to anyone who comes and asks me. I said, you want to get wealthy? This is the way to get wealthy.
Uh,
Yeah.
what's the single worst piece of advice you ever got, which in hindsight was a bad advice?
I'm sure I did over periods of time. Don't join the stock market, many things like that. But I think there's an old saying, Vishal, that birds of a feather flock together. So while you don't try to find out people who agree with your opinions, you want to see everyone or be with people who agree with your philosophy, that the markets are supreme, that you try to find great businesses, that you think independently. So I think later in my career, I try to find out not people who agree with me. I think a lot of people disagree with a lot of the stocks I pick, but who share the same philosophy of how stocks are picked, how one should behave in life, the importance of giving back, the hopefulness of a second act in life. So uh, I don't want to necessarily pick on a particular piece of bad advice that I got. A lot of people gave me a lot of advice, sometimes well-meaning bad advice. That's also possible. But I have this firm belief that I am the captain of my ship. I am the master of my own destiny. I am the owner of my soul. And that every decision I make is an informed decision that I have made. No one has forced me to do anything, buy a bad share, do something that I didn't want to do, because I chose to do whatever I did. So accepting responsibility for all the decisions and all the outcome is basically a very stoicism philosophy. But I think it's best to serve us. The minute we outsource, oh, this man misguided me or this man misled me, I think we outsource a very integral part of us, and I don't want to fall into that trap. So I would say all the decisions, good and bad, were mine.
That's a great insight. So with this, thank you so much, Mr. Damani, for your time. It's been a great session for me. Learned a lot from you. Amazing insights, and I'm sure the readers and viewers of the show are going to learn a lot as well. Thank you so much for everything that you were doing.
Thank you, Vishal. You're doing a very great job educating the investors, democratizing information. It's been a privilege to be on your show, and thank you so much for featuring me.
Thank you so much, Mr. Damani.